Hello, everyone. This is Josh Heil, CEO of Citizen Mint, and welcome to the Advisor View podcast. We are so excited to have Dave O'Brien of Evo Advisors with us today. Maybe, Dave, you can just give a quick background on yourself as well as your firm and kind of what also just led you to being a financial planner in general.
Well, cool. I'll try to be brief. Thanks for having me on the podcast, Josh. I spent almost 20 years at GE, back when GE was kind of the Google or the Apple. We were in all different types of businesses around the world, and had a great run, but realized for a number of years there was something that wasn't there for me, something that was kind of lacking in a personal fulfillment standpoint. And started learning about the CFP credentials and started planning to leave the corporate world and earn my CFP marks. And back in 2006, I did that, and I started the firm that ultimately became Evo Advisors. And one of my business partners, John Clare, was also at GE with me, and he did the same. And after about 10 years, we decided to get the band back together, and we formed, from both of our firms, Evo Advisors. We are a fee-only registered investment advisory firm. We're based in Richmond, Virginia. We serve clients around the country and kind of have a type. Our team of 7 planners are CFP professionals. We view ourselves as truly a financial planning firm, even though we're managing about $400 million of other people's money. We also are very tax planning focused, and are kind of intentionally small when it comes to our number of clients served, because one of the things that's really important to our clients, they're choosy people. We're kind of choosy on who we work with as well. So we're looking to work with clients who are great at being collaborative. And I think everybody likes to say they like to work with clients who actually take their advice. So we serve a lot of medical professionals, both nurses and doctors, as well as a good number of people who own closely held businesses. And find that they all come with some unique financial challenges, but especially some more complex tax planning challenges. And they appreciate the collaborative approach to helping them focus on what's most important to them, and understanding that we're behind the scenes working for them so that they can not have to deal with a lot of what we do. They're smart people. They could do what we do if this was their passion, but it just isn't. So that works out well. A bit of background on us too. We're pretty active members of NAPFA, the National Association of Personal Financial Advisors. I think if it weren't for our NAPFA involvement, I wouldn't be standing here talking to you today. It's just a wonderful community that has about 4,500 colleagues who help each other out around the country. And a couple of us have been extremely active in volunteering there too. Also work with a CFP board. I was a commissioner on one of their commissions for a couple years, and got to work with some really talented CFP professionals from all different business models for years. So I think this is a dynamic profession. It's challenging, and it's quite rewarding, especially when your clients show you that the difference that you have worked to enable is appreciated. So, long story short, that's who we are.
Great. No, and so I guess we had a quick conversation about this, but you mentioned, the differentiation between wealth management and financial planning, and maybe just for our crowd, just in general, because those terms can get thrown around in the same sentences, and even conferences saying this is a wealth management conference, not a financial planning conference. What are those differences to you?
You think after 20 years I'd know. I don't know. I know what financial planning is. You could argue that financial planning has wealth management as a subset. You could probably argue the opposite. To our firm, financial planning encompasses all of the components where life and a dollar sign are tethered. Wealth is about more than money anyway. I mean, I think that it's having excess opportunity. I think a lot of consumers don't really know exactly what wealth management or financial planning are. We like to say here, you know it when you see it, or you don't get it until you get it. Mm-hmm. So once you've been the beneficiary of a really good, robust process that looks at all of the various aspects of your financial life, from your cash flow to really identifying what you want out of life and making sure that money isn't the barrier to getting there, and making sure that you have achieved those goals in the most tax optimal way possible. Along the way that your, risks are appropriately managed, which also includes making sure that your employee benefits are working for you. I think a lot of folks just kind of sign up annual enrollment, but don't really know what their choices are and may not make an informed decision. If for anybody who's had to see health insurance in action, good health insurance is really, really valuable. And not using it the right way, or not taking advantage of, say, using a high deductible plan with a health savings account can mean the difference between, exchanging some current cash flow for a lot more future tax-free cash flow. Same with education planning. There are an awful lot of components to that. And then estate planning, which is not just about when you die, but it's about what could happen while you're living. I think all of those things, I know all of those things are a part of financial planning, and maybe to others, they're a part of wealth management as well. But of course, investment management's a critical part. To us, it's not the focus of the relationship we have with our clients. Sometimes we'll use the analogy, it's like, having energy in the battery. You need to make sure that there's enough to last at least as long as you do, and that allows you to do all of the things that you want to do. But our primary discussions with our clients aren't just about that. So I think all of those things together, that's wealth. But it's also financial planning. So no, definitely.
And and this is maybe a two-sided question. It's like, you kind of mentioned a lot of the stuff around how you position yourself with clients around tax efficiency and kind of, looking at their whole financial picture. But if you had a client who's referring somebody to you, what do you think they're calling out as your differentiation?
We've heard that time and availability and then personal relationship are a big differentiator that our clients have enjoyed. There are a lot of firms that take a more transactional approach. Sometimes internally, we have a saying, come see us second, because sometimes clients have had a relationship with another firm where it really wasn't about them. It was more about, like, you get your one meeting a year, and then, you get a newsletter. So I think that understanding what makes the client tick, and also just being a match, right? We're not right for everybody, and not every prospective client is right for our team either. But when you do have that match, you you see each other for, who you really are, and then can get down to the work of, okay, Josh, if you're my client, I need to understand what you and your family need and want, and what you come with, both, on the balance sheet, but as far as, your attitudes and, your history, that guides an awful lot of the choices that you're going to make. And our advice has to be informed by that. So I think most of our clients have been here long enough that they appreciate that. That's what we've been told.
Yeah, no, that's actually, I think, a key differentiator, and I think something that's going to continue to differentiate you from others. As firms sometimes just like to take on a lot of clients because it brings cash flow, but they're not all good clients. We all know. I've had some tough clients in the past. So we took on.
We've all kissed some fronts, and sometimes we've been the front.
Yeah. Yeah. Maybe you mentioned, so you serve business owners, you serve nurses, doctors, any other kind of specialties that you kind of go after from I
think the concept of a niche is one that, we've all read about or heard people talk about, and certainly is one that
I feel like Michael Kitces always talks about it. Like
niche. A lot of firms, one of my best friends only works with high-end technology professionals. I'm a former tech professional myself, so I work with some, but we don't have a niche as far as, like, we work with certified registered nurse anesthetists. We do work with a number of certified registered nurse anesthetists, which is why I know how to say that term. But, we have more of a psychographic niche. Here we are in Richmond, Virginia, which is a pretty funky, cool town. We don't serve clients only in Richmond, Virginia, but our office is in this very cool brewery and restaurant kind of section, old industrial core of the city. We kind of like have a type, right? So it's like, if people come into our office or they go to our website, they kind of can tell they're not walking into an office in a tower with lots of brass and walnut, and we sit behind desks wearing suits. If that's what somebody wants, that's probably where they should be. So our type is, you might be in Richmond, but you're not of Richmond, like old money, old Richmond, more of global orientation. Work with a number of same-sex client couples. The fact that a lot of those clients all fall within certain professions is probably more a matter of those folks want a collaborative working environment, and they want to work with a team of people who show that they really do know their stuff and can prove that, because they, in their own work, whether they own a closely held business, or they're a medical professional, or they're a tech professional, they rely on people in their own work who know what they're doing, and they need to rely on us to show that we know what we're doing, so that then they can, as I said earlier, go back to living their life knowing that we're doing our jobs properly and we can show the work. So that's a long way around to say, we don't have a niche based on what you do. We have more of a niche on, kind of how you like to work and what your expectations are for working with us.
Yeah. And you mentioned earlier, tax is a primary consideration, and, it's not what the returns you get, it's what you get to take home, which ultimately matters. And so how does that impact how you think about portfolios for your clients?
Well, I'll just give a shout out to Jeff Levine, CPA, who has been instrumental in a certification program called the Tax Planning Certified Professional. I'm nearing the end of that, and one of my colleagues, Stephen, has just finished that. It's really, really geeky, in-depth tax planning, and it's informed a lot of what we've done, and it's also validated a lot of what we've been doing for years. Because tax planning, when it interfaces with your portfolio, is more than just location optimization, or making sure that we're, taking advantage of the tax laws on things like what type of Roth conversion to make, when to do it. But it's also, just to maybe get to the Citizen Mint approach, when a client has enough, they're an accredited investor, they may have assets that aren't easy to just sell and invest in a efficient, globally diversified, market-weighted ETF portfolio. And that's where we do look to, say, Citizen Mint to assist with what's right for that client, so that some of their assets that are taxable can be invested in a manner that fits within their unique tax plan that's going to last years. So all clients have location optimization, where we want to have the tax inefficient assets held within qualified accounts. We want to have really high growth assets held in Roths. We want to rebalance within tolerance range, a lot of the things that people already have heard and read over the past, say, 10 to 20 years. I would hope that all of the listeners are, heeding the guidance of the most recent research on things like, when's the right time to rebalance, but everybody has their own investment philosophy. Ours is that over the long period of time, nobody's beaten the market consistently, but a lot of people have lost money trying. So paying tax is a form of negative return, and if we can make the portfolio as tax efficient as possible, that is certainly going to show up in the long term in the client's net worth, as well as helping them achieve all of these goals, like sending their kids or grandchildren to college, and making sure that they can pay their Medicare supplement insurance, in the most tax efficient way, and using some alternative investments appropriately can do more than just help them from a tax standpoint. It can help them from an investment return standpoint, and help them from a personal standpoint as well.
Yeah, and maybe this is a good topic just to touch on a little bit more, because for you, you're, for the most part, you're utilizing bank ETFs or other low cost providers for the alternatives. And maybe you can just talk about that process of like what clients you put alternatives in. And because I know for a bulk majority of your clients, alts aren't something that you're looking at, but for some, it makes sense.
Yes. So, our portfolios that our clients benefit from are based on the CRISP, Center for Research and Securities Prices of Booth School at University of Chicago, using low-cost ETFs, so globally diversified portfolio. And then there's a point where we will determine, could this client benefit from alternative investments? And I kind of have to just go down our checklist. Are they an accredited investor? And do they have sufficient liquidity? specifically, in non-retirement investment and bank accounts.
Yeah.
And then if those two are met, we would consider up to about 10% of the portfolio in alternative investments. We then look to the time frame for the illiquid portion of the investment. We want to make sure the client understands extremely well that this is not something that they're going to be able to cash in within the next few years.
Yeah.
And then do they understand the unique risks of private equity investing, like illiquidity, lack of marketability? We want the client to understand this specific investment and how it works. And if they're comfortable with all of what I just said, then, and by the way, if we're comfortable with it, then we would recommend that they proceed and invest. And we have with quite a number of clients to their satisfaction. And since I'd say, earlier in some of these investments, it's kind of fun to follow along at home, so to speak, with the client to see like how that project is being built out.
Yeah.
So I think, let's check back in a few years when the project's finished and it's closed out and they've gotten their money back and they've reinvested that in something else. And then we'll see their perspective and being able to say, hey, I helped create that.
Yes.
And that's, I think, when we talk with a client about an alternative investment, of course, what their unique financial arrangement is and the type of assets that they have and so forth, and the tax treatment of it, that's a really important piece. But clients don't care about that as much as they care about, okay, so I've got this portfolio between my, employer retirement accounts, my health savings account, my IRAs, my Roth IRAs, our joint account, 529s. Yeah, that's all kind of boring, which is exactly the way that we think it should be.
Yeah.
But this type of investing is something where, they understand I'm investing in that thing. And they can kind of determine, do I find that there's a values match? And that's one of the more important parts for us, is that the client connects with what they're investing in.
Yeah.
And if they do, then I think there's a lot more interest in that investment. It's actually probably where they're going to have the most involvement in knowing what they own. Because if you own the S&P 500 index fund, you're not tracking all those companies in the headlines and seeing what's going on. But if you own a piece of a project, you're going to get a quarterly update from Citizen, and it's cool to watch.
Yeah, no, definitely. And I think, and to your point around values alignment, that could be whether it's affordable workforce housing and be able to bring that to fruition. It could be around energy transition and being able to help with that. Yeah. Yeah. And you can also feel like you're actually doing something, like you're putting your money in and it's matching your values and you're actually creating this thing. You can be like, this is going to power this many homes, and it's going to take us a little bit further away from, oil drilling, which is actually important right now, given the price of oil. So,
we want to make sure that our clients are comfortable with where their money is. And I think connecting your values to where you invest is important to some people, and to a lot, but not all of our clients it is. And it's okay if it's not too.
Yeah, of course.
In those cases, it's like, well, this is still a very prudent investment. I like the way the numbers are put together. I'm comfortable with taking the risk. And if it all plays out the way that it's expected, that's going to be good for me. And by the way, I'm doing good for this particular part of the economy. That's even better. So it depends where the icing on the cake is for the client.
Yeah, definitely. And also the tax benefits can also play through, which is huge for some clients. Like when there's accelerated depreciation, that can offset something else, especially if they hold business interest or other real estate or something of that nature. And people love saving money on taxes. everybody does. And that's where you get the most referrals, usually when you're saving people money on taxes.
We work with some clients, and they're very good CPAs. And given that it's in the middle of not in the middle, in the final stretch of tax season right now, gosh, that's a hard job to be a CPA. And you don't get to see your client nearly as much as that client's financial planner gets to see the client. So we're in a unique position to do, working with their CPA to make sure that the tax preparation is not overly complex or complicated for the CPA, but the actual tax planning falls much more on our side of the fence. And understanding what type of investments are appropriate for that client is something that their CPA just does not have the time to do. If they did, I'm sure that would be a much more interesting thing than some of the things they have to do.
Yeah, and I think that's what some people expect their CPAs to be their tax strategists, and unfortunately, that's not what CPAs believe they are.
Yeah, in most cases, they just can't do it. Even if they'd like to do it, they can't do it. They just don't have the time. So working as a team, we find it works out just great, because the CPA really finds it helpful that we're taking, ideas to the client and looping them in. And the client likes the fact that the three parties are all working so nicely together. Yeah,
exactly. So switching gears a little bit here, because it's a hot topic within the industry. How are you utilizing AI currently, and where do you see it going into the future?
So currently, and by the way, the video just kind of stopped. Can you hear me all right?
Yes. Yeah.
Oh, okay. All right.
I can hear you.
So we may have been somewhat pre-adopters with AI, and earlier I said, everybody kisses some frogs. We sure did, but learned a lot a few years ago when we did a little trial trying to get an AI tool to do some meeting summarization. But now we have, for about a year and a half, been very pleased with working with one of the more robust AI note-taking tools that connects into our Salesforce system and Outlook. And that works very nicely, helps us do more thorough meeting preparation and assignment of, post-meeting activities. We are really happy to have a very close relationship with our custodian, Altruist. I won't go too far into like an ad for Altruist, but they really are serious about their investment in technology and enabling advisory firms to be more thorough in their work. So I'm looking forward to some really exciting things coming down the pike, and we may be beneficiaries of the work that they're doing. Certainly we're trying to share our ideas with them and help inform the strategy that they have, which I think is excellent. So today we use AI for meeting summarization and meeting prep. It doesn't do any thinking for us. It just makes sure that we spend less time going through reams and reams of pages of who said what, and taking better notes. Where I see it going down the path is answering a lot of questions around how many of our clients are within 5 years of being Medicare eligible and have this ratio of money in qualified versus taxable versus Roth accounts. It's going to enable us to, with hope, get out of the world of APIs between systems, so that data speaks to each other a lot faster and can automate some of the work we do. We're also big fans of our tax planning tool, Holistiplan. There is some AI there. I think that's a great example of how a really good technology tool can not do your job for you, but can do a lot of the grunt work for you so that you can spend more time thinking and developing what if scenarios. So down the path, I think that there are some opportunities for financial planning firms, wealth management firms, what have you, to enable their teams to spend more time thinking about the work and thinking about the client and less time looking for the answer in the work that they've already done and preparing for things and making sure that, if the data is in this system, that you get it correctly into that one.
Yeah.
So it'll be an interesting ride.
Yeah, it will be. It's interesting, just the ability of like what you can do and what you will be able to do in the future. And it's also what you shouldn't be doing. And that's also the question of like, what should we not be using AI for? And we'll have to decide that as we go forward.
Yeah, I think as the CFP board has updated in the code and standards a good section on selection and use of technology by CFP professionals, and kind of to summarize it, it's like if you're a CFP professional, you need to understand how that software works.
Yes,
and you need to know if it's making recommendations, that those recommendations have to be yours. So I think that's kind of a obvious guiding principle that everybody should apply. I was listening to a story about how some attorneys are using AI in preparing briefs that go to the court, and there's like a whole website that has all of these disastrous briefs that went to a court, and the judge pulled out and said, this isn't factual. So I think the same applies in financial planning. We need to make sure that the work that's presented to a client is our work. I think something that's going to be interesting too with AI, I'm sure a lot of the listeners take advantage of a lot of these annual surveys, whether it's the Schwab survey or FA Insights, the T3, but all of these surveys are asking similar questions in different ways. Like, how many clients do you have between 25 and 35? Another one asks you, how many clients do you have between 28 and 38? AI should be able to just like go answer this and then show me the answers so I can make sure that they're right. And it can take filling out one of those surveys from like, days to literally just like a half an hour. So you can spend more time reviewing the results of it. But I think there's a lot of like firm management stuff, like business planning and analysis, that AI will be able to do, or almost be like, your finance associate, so that the CFO can do their job faster.
Yeah, definitely. So, and you're, given your role on like these large organizations that look over, financial planners, where do you see the industry going over the next 3 to 5 years? What's some insights we can take from, the firms you're talking to, kind of broadly what the conversation is? Is there anything that we should note or look for over the next 3 to 5 years?
That's an interesting topic. We have seen over the past, definitely since the pandemic, an increase, certainly in the fee-only world. We've seen a lot of aggregation. So solo firms or smaller firms being acquired by a larger RIA. And in some cases, this is, because that firm did not have in place an internal succession plan, or they did, but it didn't have enough time to take. I think that is going to be a very big continued component. We've seen it with veterinarian practices as an example. Primary care physicians. There aren't too many solos out there still, because private equity is getting in and buying them. And what we're seeing with veterinarians is it drives up the cost of veterinary care, and it drives down the salaries of the people who work in the veterinarian's office. And from direct experience, I know it's also reduced the level of happiness of the people who work there. I don't know about anybody listening, but I love my dog very much. He's a member of our family, and I want whoever is working on my dog to be very happy and providing care for my dog. So I think the same can be said within RIA firms. As firms are acquired, I have heard some great stories that have gone quite well, and I have sadly had some colleagues who felt it really didn't go very well for them or their clients. So I think that's going to be a headline story for the continued years this decade, to see what happens, because as small firms, firms with like maybe under 50 employees, I think is still small, find that they are not able to sell internally because the value of the firm keeps getting higher and higher. What do the owners of the firm have? That they either have a lifestyle practice and they just retire, or they sell it. And if they sell it, to whom that firm is sold matters emotionally to the owners, to the founders. It matters to the employees and to the clients. So I think that's going to be a really interesting thing. It's also interesting from a fee-only firm standpoint, because you can't be fee-only if the company that owns you isn't. So I think there's some planning to be done, both by the acquirers and the acquired.
Interesting, yeah.
It's going to have an impact on clients too. It also means that clients sometimes will say, you know what, now it's time for me to find a different firm.
Yeah. And into the succession planning, I think it's difficult because, the numbers that they're throwing out with these RIA aggregators are crazy numbers. And so for the succession, or the person who's essentially built the firm, they're like, well, I want that number. Am I willing to sell at a lower number to my current employees? And it's kind of this like push and pull, and hopeful, and it depends. But even at a lower number, it's expensive. So
yeah. I mean, it's, we have an internal succession plan at Evo Advisors. We put it in place about 4 years ago, but it's hard, and we're not done yet. So I think there's always the risk in any small business that you're just like financial planning. You can't plan the future, but you can plan for it. So you always have to have more than one outcome.
Yes. Yeah. So how can advisors looking into the future better position themselves going forward? What do you think is like one or two things that you would tell advisors to do to position themselves better?
Well, I think education is, I'm a little biased, but I think, education is an investment you make in yourself. The more that you develop your expertise, the better the work you can do for your clients. And I think that applies to, firm owners, to sole practitioners, and to the employees in firms, because learning cultures are successful. I think that's probably one of the most important things. But you can be the smartest, most educated, knowledgeable planner out there and not know how to communicate that to the world so that you attract and retain people who would be great clients and benefit greatly from your work. So you also have to know enough about how to, for some of us, it's like icky, but like how to market. Or at least hire somebody or a marketing firm who can do that for you. I think there's a big decision point for a lot of sole practitioners of, hey, you run your own show, you make all the decisions, there's nobody to blame but you, but there's nobody to have to confer with and, influence other than yourself. So decisions are made quickly. And there's a point at which I think a lot of sole practitioners need to look and say, am I good with this? Because there's a limit to how much you can grow. There's a limit to how much you can make. And there's a limit to the total lifetime income that you'll get, because it's a little different selling a sole practitioner than it is, internal sale or external sale of an enterprise firm that's, a number of people.
Yeah.
So I think strategic planning for your own business and making sure that whatever plan you have in place is one that you're comfortable with is probably the third area. So, education to be as good as possible, marketing so that you can get that word out and help the clients who are really going to benefit from your knowledge, and then know what the future is for your firm.
Yeah. Yeah.
So it survives because we have I think, a moral duty to the clients that we serve.
Yeah, it's their financial future, a big moral duty.
Yeah.
No, those are great points. So last question, and this is going to be a little bit of something a little bit different, but what's one thing that people may not know about you, or a hobby that you like?
Well, this is my hobby. I like to say, and this is my second career. I've been doing it longer than the first career, but I still feel like this is my hobby. There's that silly saying, but it's so true, that if you love what you do, you never work a day in your life. Gosh, that should be an easy question to answer. I guess, for me, I'm kind of an open book, but geez, I don't know. I don't know. I have a pretty simple life in a lot of ways. I live here in Richmond, and I have for 20 years, and my wife and I are empty nesters now, and it's, the two of us and our dog. Our son and his fiance live in Richmond. Our son actually works for the firm. He's our portfolio manager, which is really special to be able to work together.
Oh yeah, that's amazing.
Our daughter lives in Boston and has a great career and life up there. So, I think, like a lot of early empty nesters, you kind of like to get out and travel a lot. And I don't have any, it's not like I'm like one of my business partners, John's in a band, he plays bass. I don't have any of that kind of stuff going on.
So where's your favorite travel destination then?
Spain. Okay. Love Spain. Yep. Love the West Indies as well. But we're going back to Spain in a month. Definitely such a cool culture. I love the language. The food is amazing. Culture is plural. I mean, it's just fascinating. But traveling the world is, I think, one of the best forms of education. I think it's really important as an American to get out and travel. I would say it's a lot harder to do that now. But I think a lot of the folks that I've met, whether it's in South America or Europe, kind of get it.
Yeah.
And are very nice to us. So, yeah, but travel's great. As I had said to you earlier, I took quite a lot of vacation time last year, and I think better for it.
Yes, definitely. Love travel. Well, thank you so much, Dave. Really appreciate this time, and great to be partners with you all.
Yeah, well, it's been great. As I don't know if I'll just add, for anybody listening, it's like, we put you through the ringer. We watched you for a few years, learned about you, didn't put any money with Citizen.
Yes.
And then we started, and I was the first investor, because we always go first. And it's really been a great relationship. We really value the expertise that you and your team bring, as well as, it's like the access to you and your team, the availability. You guys never make us feel like you're too busy. I emailed you about something as silly as K1 schedule, and you emailed me back the same day from a conference in Dubai. So it's great working with folks who know what they're doing and are experts at it, and are also really cool to work with, but are also just like an extension of our team. So thank you for what you're helping us and our clients with.
Well, and that's really what we want to be, is like, full extension of your team and just be a great partner to the people we work with. And we love to work with teams like you. Just like you have to pick, clients to work with, we want to work with great firms. So, and it's been amazing to see you all grow. So
life is short, and it's best to work with people that you like.
Yeah, exactly. Yeah.
Well,
Well, thank you
again.
And we will talk to you all later. Thank you for joining today, and let us know if you have any comments or questions. Citizen, sorry.